Hi there, I'm Malcolm Graham Wood and welcome to my Core Finance TV CEO interview. I'm delighted to say that today my guest is Brian Larkin, CEO of United Oil and Gas. Welcome, Brian. How you doing?
I'm very well, thank you, Malcolm. And yourself?
Yeah, I'm very well, thanks. Very well indeed. It's been really exciting watching UOG in the last few months. I remember an off-the-record interview we had a couple of months ago, which I wrote up, and it's very exciting. So why don't you give the viewers, and before we go into the sort of individual assets, a bit of an overview of UOG as you see it at the moment?
Yeah, well, I say this as we mentioned just before we came on air. I say this with an element of guilt, but we've had an extremely successful year this year, probably our best year since I started the company. You know, we started the year by completing the rock copper acquisition. Since we've done that, we went on to drill 2 successful wells, and production has increased significantly. Following on from those well results, we had the rock copper takeout. Rock copper had some good consideration stock in United, and we replaced them with institutional shareholders, which was a real milestone for us because it was the first time we were able to bring institutions into the stock, and that was led predominantly by Premier Miton. But we also extended our position in Jamaica. We took over operatorship there from Tullow, and we took over all of the 100% equity in that field. We also strengthened our board with the appointment of Imran Hill. And more importantly, as we come towards the back end of the year, we're re-engaging our drilling program in Egypt. And more importantly, we've remained cash positive throughout the entire year, which is a massive achievement given that oil went negative at one stage. And I think for H1 this year, our average oil price realized was only $26 a barrel. So to come out of the year cash positive, I think, is a significant achievement.
Excellent. Let's look at one or two of the assets, and you mentioned a good deal of them. So let's start with Egypt. You've had a fairly good bit of news on various fronts in Egypt recently. So why don't you drill down a little bit, dig a bit deeper in Egypt, and tell us all about what's going on there?
Yeah, well, it's been an extremely busy period for us. The beginning of this year, when COVID hit in March, April time, we actually postponed all of our CapEx commitments, Egypt included. And to be honest, I didn't expect us to be re-engaging that drilling program until later 2021. So to be doing it now is fantastic. So we updated the market not that long ago. We had intended to re-engage the drilling program. We contracted a rig 2.5-3 weeks ago now, and that rig has been mobbed right now, and hopefully will spud a well over the Christmas period or early January. After which then we'll go and drill a second well, which will be an exploration well, and then we'll end the year out in Q3, Q4 with a third well. So 3 wells to come in Egypt in 2021. And also we've got the monetization of the gas. When we came into the license, we recognized that the gas had been flared, and we thought this was an opportunity to commercialize it, not only from a monetary perspective, but also from an ESG perspective. It was a bit of a no-brainer. So that gas pipeline should be commissioned over the Christmas period, and we anticipate first gas flowing through that pipeline in mid-Jan, and that will give United an additional 200 barrels a day of production. The capital investment there is minimal, so the payback period is only a few weeks. So that really is a no-brainer for us. And again, it's another uplift in production. So from Egypt alone next year, we're anticipating 4 potential production uplifts across 3 wells on the gas pipeline. So it's been a very busy period for us, and in terms of planning and getting operationally getting the team focused, identifying prospects, and moving forward into a drilling program.
So what do you reckon the production is at Egypt now as we come to the end of the year?
We're just shy of 2,500 barrels as we come towards the end of the year. Started the year at about 1,000 barrels. So it's been quite rewarding from that perspective. We drilled Ash 2 this year and El Samaya 5. And our pre-drill expectations on those wells were about 500 to 1,000 barrels gross, and they obviously exceeded that significantly. And production has remained fairly constant throughout the year. So we're really pleased with how production has performed in Egypt. And that has generated quite a lot of cash that we can then reinvest in the business in the capex programs that we've got planned for this year in 2021.
Yeah, you were saying when we last met that basically Egypt washes its face. It pays for its own drilling program, which given what you've got in the books is very encouraging.
Yeah, well, what we wanted to do from the outset was build a company quickly to a stage where we had a plateau of production that essentially funded operations. And what we wanted to avoid was these annual equity raises at deep discounts that go on every year indefinitely. Thankfully, what we've managed to do within 3 years of listing is get through those difficult equity raises and get to a plateau of production where the business is ultimately self-funding. And I think we've probably done that in record time. From IPO to today, which is just over 3 years, we've gone from 0 barrels to almost 3,000 with a huge amount of upside still to come from the assets. So it's in a great position that we've got assets that are a business now that's ultimately self-funding.
Excellent. Right, I think it's probably a good time to move across to Jamaica.
Yeah.
And again, lots have been happening. When we spoke, you were waiting for the Gaffney Klein document. But there's been a lot happening. I mean, when we first met 2 or 3 years ago, you were talking about this. Since then, the Tullow have had their problems, and therefore you took it over. I know that some people feel that that having 100% an operatorship of this is quite a big mouthful. But give us some history and tell us what you think about the CPR and where you plan to go. Obviously, you imagine you're going to farm it out, but give us a bit of a run through on Jamaica, if you wouldn't mind, Brian.
Yeah, well, we took over operatorship this year, and we took over 100% equity from Tullow. Jamaica essentially is a drill-ready prospect. There's no more capex commitments on it. It's ready to go. However, the previous marketing had really focused on the Calibri target. So Tullow tried to bring in a partner when we'd come in as a joint venture partner, but they also tried to farm it down earlier last year. But the marketing effort was really focused on Calibri and Calibri only. And from our perspective, we always felt that firstly, Calibri was bigger than perhaps the operator recognized, but also was the follow-on potential. And that had never really been incorporated into the marketing narrative. So when we took over operatorship from Tullow, the first thing we did was to try and address that. And we did that by commissioning the CPR report. And we were right to do that. And our previous estimates of Calibri, our own internal estimates, we were right to believe that it was on the low side at 229 recoverable. The CPR came back and demonstrated potential recoverable barrels of Calibri alone of nearly 400 million barrels. And it also identified 11 other prospects and leads, which in total could combine another 2 billion barrels of recoverable oil. That alongside Calibri is close to 2.4 billion barrels of recoverable oil, which is a game changer in terms of the marketing story in Jamaica. You've gone from talking about one standalone at 229 to a standalone of 400 plus 11 more. That's an absolute game changer in terms of your marketing, your narrative, and the potential scale of offshore Jamaica. And this is one of the things that we have always believed in. From 2014, when I worked on this license with my team in Tullow, to leaving Tullow and coming back into the license with United, we have always wholeheartedly believed in the potential of offshore Jamaica. And the CPR for us was a bit of a punch the air moment for us, to be honest, internally, because it validated our belief. The next steps for us, we've had quite a number of reverse inquiries since we released the CPR. And to be honest, we've been kind of having a drip feed of inquiries, passive inquiries, for the last 6 or 7 months on Jamaica, but we haven't engaged formally in any conversations. We are awaiting the final piece of work which we wanted to do, which was an oil seep study report. And essentially, the last time this was done by Tullow, there wasn't a large enough sample taken. So we've gone back and sampled a wider coverage, I guess. And we'll have the results of that work mid to late January. At that stage, that piece of work coupled with the CPR, coupled with some remodeling, will allow us to go back to the market to potentially farm that down and bring in a partner. We have until early 2022 to bring in somebody to either drill the well or drop the license. So we have a bit of running room left on it. We have at least 12 months to bring in a partner, and we'll start pursuing that more aggressively early next year. But you know, it's the best thing about Jamaica is there's $35 million of, just shy of $35 million worth of work spent on it to date by the previous operator between 2D and 3D. There's targets identified, there's prospects and lead identified. We've extrapolated the story out since we took over operatorship. Certainly feel now that we've got a drill ready opportunity. And it's just a question of putting the right partners together to go and drill it.
Excellent. So basically, you're pretty fully, you'd say you're fully funded for Jamaica as it stands at the moment, subject to the terms of a farm out, and you know, you could get a carry, you could get anything. So, you know, you might not even need to get the checkbook out there for a while. Well,
you could say we're fully funded in Jamaica for the moment, but there is nothing to fund. The work is done. The CPR report and the oil seep study cost us less than $150,000. You know, so we took this license on knowing that we pretty much had a standalone target. But our view was, if we wanted to bring in a partner, we'd have to expand the story and promote the upside. So, you know, we've done that, and we've done a lot of internal work to expand the story into the other prospects and leads. So you're now going back to the market with a fresh marketing document, fresh approach, and it's not just, you know, United Oil and Gas saying that we think this is a bloody good project. We've also got quite a lot of science backing it up now over the extended acreage, and that it really changes the narrative considerably.
Yeah, and I guess that means you've got a pretty open mind when you get some people in the data room about how much you seed and in terms of, you know, what you get back in terms of a carry and so on. You can be pretty relaxed if you have somebody who wants a bigger chunk or the other way around.
Yeah, you know, Jamaica, you're absolutely right. We're in a strong position, I think, in any type of negotiations. The gross well costs, the latest estimate we have to drill a well will be $30 million gross. So, you know, I kind of feel that we're in a strong negotiating position should somebody come in and make us an offer to farm in. But, you know, look, the other way of looking at it, of course, is as production grows in Egypt and across the rest of the asset base, you know, we can start thinking about how we could fund a larger piece of that well ourselves from free cash.
Yeah.
Which really strengthens your hand, because then you're kind of saying to the market, well, you know, we're not actually totally relying on the market to fund this well. We have a growing cash base. So, you know, we'll see how next year plays out. But there's quite a lot of interest in the acreage. And, you know, if you look at oil prices performance in Q4 this year, I mean, we went above $51 this morning. I think it's fallen off a little bit this afternoon. But, you know, there's no doubt about it. We'll go into a much more stable oil price environment next year. And if oil price keeps nudging forward, it'll attract more investment back into the sector. And the larger companies and the majors will start looking at exploration again. And not just because of the fact of where oil price is going, but because they have to.
Yeah.
Because they have to. There's been no reinvestment in huge exploration projects in the last 5 to 10 years, other than the Guianas and Suriname. There has been no other, you know, large scale capital investment in exploration projects. And, you know, we're ultimately, you know, the majors will have to replace barrels in the ground. And that is acquisition or exploration. So I certainly feel that exploration will become of much more.
Well, certainly you're in the right postcode. So, you know, that's good enough. Now, we talked a lot about Egypt and Jamaica, but you've got quite a lot of other peripheral bits and pieces within the business, some of which I know from when we last spoke, you're sort of, it's on the back burner, some of which might go. Why don't you just run us through what's in the rest of the business?
Yeah, well, I guess Italy's probably the next in terms of our priority list. We are due the environmental permitting from the ministry on the Italian asset. Once that's in place, we've got a 6-month lead time to first gas. The latest guidance from our operator is that we should have that permitting in place by the end of Q1 next year, at which stage then it'd be a 6-month lead time to first gas. Now, I'll caveat that, you know, we would have expected the environmental permitting to have come through this year, to be perfectly frank, and that hasn't happened. So we are hopeful that it happens in Q1, but as soon as we have that, we have a 6-month lead to first production. But just to put some scale on Italy now, we're currently producing just shy of 2,500 barrels of oil equivalent in Egypt. We'll increase that by 200 barrels when the gas is monetized through the pipeline, and we're going to drill 3 wells. You'd expect a further uplift in production from Egypt. Italy's going to produce about 150 to 200 barrels of oil equivalent net to us. So I guess the reliance on Italy as a core asset, we wouldn't see it as our most important asset now. It's not as core to us as what it would.
Yeah.
But it's still a great asset, and we look forward to getting it into production, hopefully at some stage towards the back end of H2 next year.
So if the Jamaica farm out works or so on, have you got any plans to make any acquisitions, do a bit of M&A, broaden the business a little bit at all, or are you just are you tucking into what you've got at the moment?
I think we've enough to get on with at the moment, to be honest. I think our focus needs to be developing our existing assets, increasing our production, banking cash, and seeing what we can do thereafter. We're not pursuing any opportunities at the minute. The focus really has to be organic growth from the existing asset base. And ultimately, that's why we bought the Egyptian business, was to get after the upside. So we need to go and do that.
Yeah.
We need to go and increase our barrels, increase our cash flow, and then we can go and look at doing something. Now, in saying that, if a no-brainer comes along that makes sense, that we can structure without having to do an equity raise, maybe leverage our debt position, well, then it'll make sense to look at it, But for the moment, the focus is on developing the existing assets. I don't want to go back to the market. We've no plans to go back to the market. We don't have to go back to the market to raise equity. I think we've enough to get on with without having to do a deal that needs an equity plug.
It's nice to be in a position where you're fully funded. You don't need to raise any more equity. And you did mention your shareholders before, because you said it was nice as a result of the equity raise and the Rock Copper deal that you've now got quite a few institutional shareholders on the case. So there'll be one or two of them here watching in here, and of course you've still got a very solid and very good following of retail shareholders as well.
Yeah, we're very lucky. We've got very supportive shareholders. We're very, very lucky, and they're not taken for granted. But we've got a very supportive base of shareholders, and it was great to bring in the institutions this year. It's taken us a long time to get them into the stock, but thankfully we were able to bring them on board this year, which was great. But now we have to get on, develop the existing assets. Thankfully, we're not relying on the equity market, which is a great position to be in. We just got to get on and execute our work programs.
Yeah. And you mentioned that Imran Hill he has joined the board as an NED. Have you made any other changes or plans for the board or for the team, the leading team, management team?
No, very happy with our board and our executive team. We if great people become available, we go and try and get them. And we've done that. We have increased our internal headcount because a couple of very talented people became available during the year, and it was great to be able to go and get them and strengthen the team. But I think if you stand back for a minute and you just look at the quality of the board that we've got, Graham Martin's bio speaks for itself, Aman's, Alberto. I think we've got a board, and we're certainly moving our board towards a position where, we're dressing for our next promotion. And that's what we always talk about internally, is dressing for our next promotion, planning and structuring the business for the next level of where we want to be at. And that can come from organic growth, but certainly we've a board whose CVs would match the executives board's ambitions.
Excellent. Well, we've had a very good run round. We're running a bit low on time, but we've had a good run around the whole of the business. At this stage, what I normally do is say to the CEO, tell me how you envisage seeing your company, United Oil and Gas, in the next 12 to 18 months, Brian, if you wouldn't mind.
Yeah, well, we've an extremely busy year ahead. We've had a great year this year. I think next year is going to be even better. We have 5 in total production uplifts throughout 2021. We've got the 3 wells in Egypt. We've got the gas pipeline being monetized, and we've also got first gas from Italy. So 5 potential uplifts in production next year. We've also got Jamaica and moving that through the gears. We're now firmly in the driving seat on Jamaica. We hold all the cards. We've got we're well armed now with enough technical information and third-party support to go out to the market to bring in a partner. So certainly as we go towards the back end of next year, I would be hopeful that we can better our production levels that we achieved in 2020. I think we'll have a better oil price throughout all of next year, which should lend itself towards a farm down in our Jamaica asset. So I think, I think we will be bigger, better, stronger than where we are today. What I would say is, to come out of what we've 2020 with such a challenge and pressure on oil price and on the equity markets, to come out of that year in a strong position, having achieved what we've achieved, I think it leads us to be in a great position to kick on now in 2021 with the asset base and with the corporate story.
Brilliant. Well, it sounds like you've got a very exciting year to come, and you've had a good year as well. So I'm very delighted for you. Brian, thank you very much for joining me today. It's been great to talk to you. Thank you very much for watching. My name is Malcolm Graham Wood. Today has been my Core Finance TV CEO interview. My guest has been Brian Larkin, CEO of United Oil and Gas. Thanks to him, and thank you for watching, and look forward to seeing you again soon. Bye now.